A tariff is a tax on imports or exports. In other languages and very occasionally in English, tariff, or its equivalent, may also be used to describe any list of prices. Etymology. The small Spanish town of Tarifa is sometimes credited with being the origin of the word tariff, since it was the first port in history to charge merchants for the use of its docks. The name Tarifa itself is derived from the name of the Berber warrior, Tariff ibn Malik. However, other sources assumed that the origin of tariff is the Italian word tariffa, translated as list of prices, book of rates, which is derived from the Arabic tarif, meaning making known or to define. Customs duty. A customs duty, a due, was the indirect tax levied on the import or export of goods in international trade. In economic sense, a duty is also a kind of consumption tax. A duty levied on goods being imported is referred to as an import duty. Similarly, a duty levied on exports is called an export duty. A tariff, which is actually a list of commodities along with the leviable rate of customs duty, is popularly referred to as a customs duty. In the Kingdom of England, customs duties were typically part of the customary revenue of the king, and therefore did not need parliamentary consent to be levied, unlike excise duty, land tax, or other forms of taxes. This is no longer the case. Calculation of customs duty. Customs duty is calculated on the determination of the assessable value in case of those items for which the duty is levied ad valorem. This is often the transaction value unless a customs officer determines assessable value in accordance with the harmonized system. However, for certain items like petroleum and alcohol, customs duty is realized at a specific rate applied to the volume of the import or export consignments. Harmonized system of nomenclature. For the purpose of assessment of customs duty, products are given an identification code that has come to be known as the Harmonized System Code. This code was developed by the World Customs Organization based in Brussels. A harmonized system code may be from 4 to 10 digits. For example, 17.03 is the HS code for molasses from the extraction or refining of sugar. However, within 17.03, the number 17.03.90 stands for molasses. Introduction of harmonized system code in 1990s has largely replaced the standard international trade classification, though SITC remains in use for statistical purposes. In drawing up the national tariff, the Revenue Department often specifies the rate of customs duty with reference to the HS code of the product. In some countries and customs unions, 6-digit HS codes are locally extended to 8 digits or 10 digits for further tariff discrimination. For example, the European Union uses its 8-digit CN and 10-digit tariff codes. Customs authority. A customs authority in each country is responsible for collecting taxes on the import into or export of goods out of the country. Normally the customs authority, operating under national law, is authorized to examine cargo in order to ascertain actual description, specification, volume or quantity, so that the assessable value and the rate of duty may be correctly determined and applied. Evasion of customs duties takes place mainly in two ways. In one, the trader underdeclares the value so that the assessable value is lower than actual. In a similar vein, a trader can evade customs duty by understatement of quantity or volume of the product of trade. A trader may also evade duty by misrepresenting traded goods, categorizing goods as items which attract lower customs duties. The evasion of customs duty may take place with or without the collaboration of customs officials. Evasion of customs duty does not necessarily constitute smuggling. Duty-free goods. Many countries allow a traveler to bring goods into the country duty-free. These goods may be bought at ports and airports or sometimes within one country without attracting the usual government taxes and then brought into another country duty-free. Some countries impose allowances which limit the number of value of duty-free items that one person can bring into the country. These restrictions often apply to tobacco, wine, spirits, cosmetics, gifts and souvenirs. Often foreign diplomats and UN officials are entitled to duty-free goods. Duty-free goods are imported and stocked in what is called the bonded warehouse. Duty calculation for companies in real life. With many methods and regulations, businesses at times struggle to manage the duties. In addition to difficulties in calculations, there are challenges in analyzing duties, and to opt for duty-free options like using a bonded warehouse. Companies use ERP software to calculate duties automatically to, on one hand, avoid error-prone manual work on duty regulations and formulas and on the other hand, manage and analyze the historically paid duties. Moreover, ERP software offers an option for customs warehouse, introduced to save duty and VAT payments. In addition, the duty deferment and suspension is also taken into consideration. Political analysis. The tariff has been used as a political tool to establish an independent nation. For example, the United States Tariff Act of 1789, signed specifically on July 4, was called the Second Declaration of Independence by newspapers because it was intended to be the economic means to achieve the political goal of a sovereign and independent United States. The political impact of tariffs is judged depending on the political perspective. For example, the 2002 United States steel tariff imposed a 30% tariff on a variety of imported steel products for a period of 3 years, and American steel producers supported the tariff. The move was criticized by the Cato Institute, a libertarian think tank. Tariffs can emerge as a political issue prior to an election. In the lead-up to the 2007 Australian federal election, the Australian Labor Party announced it would undertake a review of Australian car tariffs if elected. The Liberal Party made a similar commitment, while independent candidate Nick Xenophon announced his intention to introduce tariff-based legislation as a matter of urgency. Unpopular tariffs are known to have ignited social unrest. For example, the 1905 meat riots in Chile that developed in protest against tariffs applied to the cattle imports from Argentina. Tariffs within technology strategies. When tariffs are an integral element of a country's technology strategy, some economists believe that such tariffs can be highly effective in helping to increase and maintain the country's economic health. Other economists might be less enthusiastic, as tariffs may reduce trade and there may be many spillovers and externalities involved with trade and tariffs. The existence of these externalities makes the imposition of tariffs a rather ambiguous strategy. As an integral part of the technology strategy, tariffs are effective in supporting the technology strategy's function of enabling the country to outmaneuver the competition in the acquisition and utilization of technology in order to produce products and provide services that excel at satisfying the customer needs for a competitive advantage in domestic and foreign markets. The notion that government and policy would be effective at finding new and infant technologies, rather than supporting existing politically motivated industry, rather than, say, international technology venture specialists, is however unproven. This is related to the infant industry argument. In contrast, in economic theory, tariffs are viewed as a primary element in international trade, with the function of the tariff being to influence the flow of trade by lowering or raising the price of targeted goods to create what amounts to an artificial competitive advantage. When tariffs are viewed and used in this fashion, they are addressing the country's and the competitors' respective economic healths in terms of maximizing or minimizing revenue flow rather than in terms of the ability to generate and maintain a competitive advantage which is the source of the revenue. As a result, the impact of the tariffs on the economic health of the country are at best minimal but often counterproductive. A program within the U.S. intelligence community, Project Socrates, that was tasked with addressing America's declining economic competitiveness, determined that countries like China and India were using tariffs as an integral element of the respective technology strategies to rapidly build the countries into economic superpowers. However, the U.S. intelligence community tends to have limited inputs into developing U.S. trade policy. It was also determined that the U.S., in its early years, had also used tariffs as an integral part of what amounted to technology strategies to transform the country into a superpower.